chairs are just sitting on right now.
Hello, everyone, and welcome to One Chair. As a short reminder, none of what you will hear is financial advice, and this podcast is for entertainment and educational purposes only.
Hey, everyone. All right, so in this episode, we will be looking at STRK in more detail, following a comment that we received from our audience. And we will be looking at different Bitcoin Treasury companies, namely Metaplanet, Semler Scientific, and the blockchain group. We will also be discussing the Chanos Saga that happened throughout last week. Great. So I think, Quentin, you have a bunch of things to tell us about STRK, so let's get started.
All right. Yeah, we'll start right away with a new slide, maybe to explain a bit in more detail what this preferred stock from Strategy is. STRK is a preferred share that was issued by Strategy, and the current market price as of June 17th that they were recording this is $103 per STRK share. STRK has a fixed dividend that they pay per share of $8 annually. So you can see with the current price, it's a bit under 8% of yield that you get by buying this instrument. So quite a high yield instrument if you compare it to treasury bills, for example, that are more yielding around the 4 or 5% mark, or other preferred shares that trade more around 6. So it's a good yield that you're getting today on that. What's interesting about this is, again, that it's preferred equity, and it has a liquidation value preferential over the common equity of $100. This means that in case of a bankruptcy of Strategy, you would get priority over the common shareholders in getting your money back. And the money you would be getting back is $100 per share. So you can see already you are paying a bit of a premium to the liquidation price. As of today, you have to pay 103, and in case of a liquidation, you would only get 100 back. But still, it is good insurance in knowing that you have the priority over common shareholders here. And the most interesting thing about STRK is the embedded call option that you have with it. So by buying STRK, you're directionally long a perpetual call option on MSTR. Perpetual means there's no expiration date on your call option. And all of this makes this instrument super interesting, because if you think about the price of MSTR falling, we think that the downside of STRK is actually quite limited, because you have this $8 per share dividend that is fixed, right? So if you think about the price of STRK getting under pressure because MSTR is under pressure, we don't really see a world where STRK goes below $60 to $80 a share, because this would mean that the yield you get on this instrument is very high, and it will be bought up by the fixed income market participants here, because under $80 you get more than 10% yield on this instrument. So it's there will be demand from the fixed income that kind of put a floor, we believe, on this instrument. So you have kind of a downward protection through this high dividend that they're paying. And on the other side, if you think MSTR will increase in price, you will have equity appreciation that you can benefit from, because 10 STRK shares convert into one MSTR share at a strike price of $1,000. So to give you an example of what you would have done in the past, if you have $1,000 that you want to invest, and you want to have some Bitcoin exposure, but you're also interested in getting some passive income, right? So what you would have done up to now is buy $500 worth of BTC and buy $500 worth of treasury bills that yield you 4 to 5%. And with that, you would have the BTC upside potential, and additionally around $20 to $25 of annual passive income that you could generate from the $500 in the treasury bill. And now instead of that, you can just buy STRK, $1,000 of STRK. You get leveraged Bitcoin upside, because MSTR is a leveraged Bitcoin play, basically, and you get the MSTR exposure. So you have your leveraged Bitcoin upside with STRK. You have downside protection through the liquidation preferential at $100, and as explained, the 8% dividend that is kind of putting a floor on the instrument itself. And you get a yield that is between 7 to 9%, depending on the market price of Strike, or it's $80 in annual passive income that you get. So you can see it's a lot more passive income than you would get with the first strategy. And you get the Bitcoin exposure you wanted, even leverage Bitcoin exposure in the end, with, we believe, not that much additional risk than you would take on the above strategy. Okay, so that was a lot of information on Strike. We created a chart here to show you what we believe the value of Strike will be, or how it will evolve with different MSTR prices here, to the downside and also to the upside. So you can see in blue the price evolution of Strike. You have the x-axis with the MSTR price, and the y-axis is the Strike price. And what I explained before, we believe that if MSTR is under pressure, which would probably mean a Bitcoin bear market and the stock going down, that Strike will be affected, but there will be a floor somewhere between $60 and $80. Strike will not go below that because you have this high yield that is behind it. So we're seeing a price of MSTR between 0 and 200 would give you a Strike price of around $80. Then as we go into current MSTR prices, we see the market prices, a Strike currently at $103, so around the $100 mark for current prices. And then as you approach the $1,000 mark for MSTR, the Strike will start to linearly appreciate with MSTR's appreciation. So you can see after $1,000, for every dollar that MSTR goes up, Strike will go up by 10 cents, because 10 Strike shares convert into one MSTR share. And in orange here, we have the yield that you can see. Why do we have this floor? Because the yield starts getting really interesting as the price of Strike falls, right? And then as the price of Strike will rise, the yield will become less and less interesting. And probably what will happen after $1,000 is that people will convert their Strike shares into MSTR common stock, because it makes sense at this point, and the yield is less interesting.
Maybe it's worth noting that this is a simplified assumption, right? Because all of the pricing and the yields will also be considering the treasury bills yields. So if interest rates lower or get hiked, the price of Strike will be impacted. So that's maybe something to keep in mind here.
Yeah, great point. Here we only show the correlation to the underlying MSTR price, but there's a lot of other factors that could impact the price of those instruments. The main one being the interest rates.
Exactly.
Sure.
And I think we already see it here, right? With the Strike price being at $103.55. I believe it's already a factor of the current rates.
And if, as anticipated, rates get cut in the upcoming months, the Strike will probably appreciate in value faster than you can see here on the chart. Okay, so that was it on Strike. If you have any questions or additional clarification needs, let us know, and we'll be happy to provide that in the upcoming episodes.
Yeah, exactly. So I think STRK is a very interesting product, as we've mentioned already in the past. And this is typically the type of instrument that will be disrupting the 60-40 portfolio that is legacy now, right?
Yeah, it's basically both in one, right? Because you have the yields of the bonds and you have the upside of the equity all in one.
Good. Let's shift gears to Bitcoin Treasury Companies.
Let's go. So first, let's talk about Metaplanet, which is the poster child currently of the Bitcoin Treasury Companies, right? With a lot of focus, a lot of 20% appreciation days over the last weeks. So what is it?
Yeah, so Metaplanet, as you mentioned, is the rising star. It initially was a hotel company in Asia. And during the COVID years, it had a lot of trouble, obviously, with their business. They initially pivoted as a Web3 company, and then they re-pivoted again to become a Bitcoin Treasury company. And they've done it very, very well. They started this new strategy in, I believe, March or April 24, so a bit over a year now. And they've managed to accumulate quite a few Bitcoin. As of yesterday, they achieved two major milestones. The number one being that they got 10,000 Bitcoin on their holdings. And the second one is that they achieved over 1 trillion market cap in the Tokyo Stock Exchange.
That translates to $7 billion US dollars approximately.
And as you mentioned, they had a tremendous day yesterday, ripping off up to 25%, I believe. They've cooled down a little bit in the meantime, but it's definitely a stock to watch. And they've been very meticulous in their accumulation. So they mainly used moving strike warrants, which is an ATM-like vehicle in the Japanese market. But they also have an interesting second strategy where they sell put options on Bitcoin to accumulate even further Bitcoin. So if you think about it, they get some cash flows by selling those put options. It's an interesting tool because if the price of Bitcoin remains or increases, then they get cash flows from the put options. And if the price of Bitcoin goes under the strike price of the put, then they accumulate further Bitcoin, which is their initial goal anyways. So it's like a win-win situation. So that's actually a very interesting or smart way to do it. And lastly, they're also able to issue 0% bonds, as the Japanese market is very low yielding. So they get some really interesting bonds on their side as well. So yeah, they have a very interesting model. They're accelerating their accumulation, right? So it's very impressive to see.
Yeah, so just to add on Metaplanet, as you mentioned, it's they're operating on the Japanese market, right? And they're the first one to do so. So super interesting. And Saylor was actually asked in a recent interview if he sees those new Bitcoin Treasury companies coming up as a competition. And his answer specifically to Metaplanet was that no, they're complementary because Strategy is not operating in the Japanese market and cannot tap this pool of capital that Metaplanet is tapping into. And at the end of the day, the beautiful thing about this is that they're all putting Bitcoin on their balance sheet and they're putting upwards pressure on the price of Bitcoin through that. And at the end, Strategy also benefits from any additional company adopting that strategy, but specifically the ones that operate in different markets, because then they don't compete on the same capital pool. So it's interesting to see that evolving in Japan. It will be interesting also to see what they do in the US because they opened a US subsidiary now. So we'll see if there is competition there on the US market through that.
It's going to be some sort of cooperative competition, right? Because their goal will still be to accumulate Bitcoin, even if they're tapping in the same pool of or the same market. Last point on Metaplanet, which I find interesting, is because exactly they're trading in the Japanese markets, but they're also trading in the US and in Europe. They're basically being traded throughout the whole week, 24 hours a day. And that makes it for a very liquid share to some extent. So that's probably also one of their superpowers, if you can say it that way.
So should we move to the next one with Semler?
I think we can, yeah.
So Semler is an American company. Back to the States here. They adopted a Bitcoin Treasury Company playbook around a year ago. And unlike Metaplanet, they maintain their main business line, which is a medical device company that is very profitable, and all of their excess free cash flow they put into Bitcoin basically. But they have been a bit more aggressive than just converting their treasuries into Bitcoin. They also took on some convertible bonds, so put debt on their balance sheet to acquire more Bitcoin. It's a stock that has not performed very well actually over the last 6 months. It's been punished by the market. It is trading very close to 1 MNAV, so their Bitcoin on the balance sheet being worth more or less the same as the company overall, even though they have a viable business. It shows that not every Bitcoin treasury company automatically just explodes in value. It's also about the execution and the way their teams communicate, right? I'm not 100% sure why the stock is not performing, because they do seem to understand Bitcoin and have been leveraging their balance sheets to acquire more Bitcoin through the converts, but the market is not rewarding them so far.
Yeah, maybe a couple of thoughts from my end on why they might not be performing so well. Number one is their dual strategy, because you could just buy a strategy or a Metaplanet that are a pure play Bitcoin company in a sense. And if you're thinking of going for medical appliances, then you would buy a stock of a company that's probably performing better than they are or more successful. And that way you don't have to buy Semler Scientific. So that could be a reason. I'm not 100% sure. And the second one that pops out is probably the whole narrative surrounding Semler Scientific. You have for strategy, obviously, Saylor, and for Metaplanet, Simon and Dylan, who have been super vocal. They're very crystal clear on their strategy, and they appear in podcasts and in conferences. And we have maybe not seen so much from Eric Semler, which is the I would say the most prominent character for Semler Scientific. I do think they will get better at this, as we've seen his appearance become a bit more prominent in the last few months in conferences and podcasts. And I think the addition of Natalie Brunel to the board will probably also help this narrative, because she's a very prominent Bitcoiner, Bitcoin journalist, and she really understands also the Bitcoin. Nonetheless, when you hear Eric Semler talk about it, he understands very clearly the Bitcoin playbook. So there's no doubt about it. I think it's just a shame that he hasn't been more active in it. So probably that's the second thing that would pop into my head when looking at the performance of the stock.
That makes sense, and it's just a picture of today, right? This can change, and maybe they will also change their communication strategy a bit. It seems like they are taking steps towards that, right? With the addition of Natalie, as you mentioned, to their board. So let's see how they evolve. And we have another very hot stock currently also on the list to discuss today, so we can move to that. And if you want to explain the blockchain group.
The blockchain group is the first Bitcoin treasury company on European soil. Its main market is basically France, Paris. The blockchain group was originally a tech company focused on blockchain. They pivoted to a Bitcoin treasury company in November 2024. They have been extremely successful in their strategy as well. They have some very interesting tools to accumulate as well with the Bitcoin denominated bonds, which is something that I'm still trying to wrap my head around. So I don't know. I think Quentin, you might know a little bit better how they work than I do.
Not in detail, but I think that the thought is interesting, right? To have the debt denominated in Bitcoin. If you think about the two potential scenarios, Bitcoin going up or down, if Bitcoin goes down, they have a downward protection that they won't get margin called or be liquidated, because they hold the Bitcoin and the debt is in Bitcoin. So the worst case scenario, they just give the Bitcoin back at a certain point when the debt matures. On the other side, if Bitcoin goes up, the stock probably goes up with it, because it's a leveraged Bitcoin play. And then the debt converts into shares. So they just have to issue shares, and the debt disappears. So it's the same as if the debt was denominated in USD in that sense, on the way up. And on the way down, you're protected. So it's quite a smart strategy in my eyes.
It just takes, I think, a little bit used to wrapping your head around this, because exactly, although you try to think yourself in a Bitcoin standard, it's still you have to shift your mindset. All right, so Maybe just to explain a little bit, the reason that we picked those 3 companies to explain today and with strategy. So these are the 4 main ones, I would say, or the 4 leaders in terms of Bitcoin Treasury Company strategy. And obviously there's a lot more, and there's a lot more popping up. We will discuss them probably in detail as they start becoming more operational or growing or doing something novel that could be very interesting to everyone. Yeah, I think for now we just stick to those 4.
And on those 4, we have some more information to share with you today. So we can go right into our next slide here, where we put together kind of a summary of the most important metrics of a Bitcoin Treasury company. And also this is not exhaustive, right? You could be tracking a lot more, and we might add some metrics as time goes on. But for now, it's the 4 companies that you see here: Strategy, Metaplanet, Semler, and the Blockchain Group, with the different metrics we have here on the slide, their Bitcoin treasury quantities and respective value of those Bitcoins, the debt that they hold on their balance sheet, the cash that they hold on their balance sheet. With that, we can calculate the debt to asset ratio and the Bitcoin price that would be required to service that debt. This gives you a bit of a perspective on the risk of the different companies. Then you have the market cap, and with that we calculate the MNAV that we have talked about, which gives you an understanding of how much ability they have to leverage their ATM, for example, to be more accretive to their shareholders. And then we have some new metrics that we'll introduce to you today, with the first one being the year-to-date Bitcoin yield, which basically shows you in percentage how much more Bitcoin per share are those companies able to accumulate for their shareholders. So in the case of Strategy here, you can see if you had bought Strategy on the 1st of January, today you would have 19% more Bitcoin per share than on January 1st. It just shows you how quickly they're able to accumulate Bitcoin. And you can see here big discrepancies between those 4. And for those of you that are listening, we have Strategy and Semler with 19 and 26% respectively. And then Metaplanet and the Blockchain Group, with Metaplanet with 266% BTC yield, and the Blockchain Group 1,100%. Which basically means if you had bought the Blockchain Group on January 1st, you would have 11 times more Bitcoin per share than at the time. So huge yields on those.
So we have 2 more metrics that are a bit related to the Bitcoin yield year to date, which is the Bitcoin gain year to date. And this one is very simply multiplying the Bitcoin yield with the total amount of Bitcoin. And the second one is the Bitcoin dollar gain year to date, which is very simply, again, multiplying the Bitcoin gain year to date to the dollar value. And that gives you an overview of how much Bitcoin or the dollar amounts the company has made since the beginning of the year, accounting for dilution, so share dilution.
Yeah, and it's an interesting metric to look at in comparison to the Bitcoin yield, right? Because you can see, for example, Strategy with compared to the others, a poor Bitcoin yield, but it's just because of their size too, right? If you look at the Bitcoin gain in dollar terms, they made 8 billion in the first 6 months of the year. Still a very big Bitcoin accumulation machine, but on another scale than the others. That's why their Bitcoin yield is lower.
Yeah, absolutely. Yeah. It's funny to see on one hand the Bitcoin yields of Metaplanet and Blockchain Group being so huge, and when you compare them to Strategy, the amount of Bitcoin that was added is actually minuscule. So it's good to have a look at the comparison, and maybe just for the listeners. So for Strategy, we have a Bitcoin gain year to date of 76,663 Bitcoin. For Metaplanet, it's 3,971. Semler Scientific 614, and for the blockchain group 439. So you see the huge discrepancy here between the different companies.
And it shows also that the smaller companies have it easier to have a high Bitcoin yield.
Yeah, and it also accompanies the high MNAVs, right? As you can see as well. So strategy with a 1.85 MNAV, quite, I would say, medium, and the Metaplanet and the blockchain group with both 5.91 and 5.94 respectively are way ahead, and actually it just helps their accumulation, because obviously when they use their ATM or ATM vehicles, they're able to accumulate Bitcoin faster than strategy in some sense. And unfortunately, you see Semler lagging behind with their 1.1 MNAV as of today. As mentioned before, probably punished for a couple of reasons, right?
One more thing to mention on this one, you see the highlighted colors that we have on the debt to asset ratios and the Bitcoin price required to service the debt. This shows you kind of the risk that those companies bring with them, but it doesn't show the full picture again there, because if you look at strategy, for example, they have a debt to asset ratio of 18%. This is below their stated target of around 20 to 30%. What strategy is saying is they don't want to have the debt to asset ratio too low, because then they're under leveraged and it compresses their MNAV. But they also don't want the debt too high to not risk getting liquidated at some point, right? So they want to keep that in bounds. But it is actually a bit below their target now, and shows that they would have room for additional debt on their balance sheet. And the debt to asset ratio actually decreases as the price of Bitcoin goes up, right? So if we expect Bitcoin to go up, this picture will get even more deleveraged. The biggest difference you see here is between Metaplanet and the blockchain group, right? With Metaplanet, almost no debt, but it makes sense because they don't really use much of convertible bonds. They're more focused and more aggressive on the ATM, and this doesn't generate any debt. That's why their debt load is so low. And on the other hand, the blockchain group, they're more focused on the convertible bonds, and they denominate them in Bitcoin, which means that they have the ability to have a lot higher debt to asset ratio, because they don't have the risk of getting liquidated if the price of Bitcoin goes down, as we explained before, right? Because they hold the Bitcoin, in worst case, they have to give it back at some point, but they can have a lot higher leverage than the others through their different strategy of denominating the debt in Bitcoin.
One thing that pops up here is that although they're all Bitcoin Treasury companies, they're all utilizing such a different strategy that if you're putting them one next to the other, you cannot really compare them either, right? And they, because their debt to asset ratio or their different metrics make sense for their specific use case. So when you're analyzing a Bitcoin Treasury company, that's something that you might want to keep in mind: is what's their strategy? Why does this metric, or why is this metric the way it is? Does it make sense? Does it not make sense? But for these companies, you see that they're quite in line with what we've talked about, right?
Exactly. And we're trying to show some metrics that could give you indications on risk, but then it's so nuanced, right? They all have very different strategies, and you have to understand the background as well to see what the risk really is. And maybe let's go through the exercise of going through them one by one. What is their risk? How would they behave in a bear market, right? Starting with strategy. They have those the options of the preferred shares to issue more of those to be able to support their MNAV and to pay debt if necessary. So that's their protection, combined with the debt to asset ratio that they try to keep in line. Then if you want to talk on Metaplanet, maybe what
Just one thing on strategy, which is noticeable, is that they still do hold, at least based on our last research, 60 million on cash, right? Which is a tremendous amount when you think about it. And probably it's to serve the dividends, right? of these preferred equities, because there's as we talked about it during last episode, there's a lot of people that have been questioning where does the yield come from. But as long as strategy holds some cash for their dividends, I think there should be no big issue on that sense. And yeah, I think it just gives a little cushion of protection for them, and I think that makes perfectly sense as well. And then Metaplanet, at least to our knowledge, for example, in completely contrary to strategy, they basically don't have any cash, but that also makes sense because they don't have any dividends to service, and their main focus is on the ATM. In a bear market, I think their engine would stall, but they wouldn't have big issues because they don't have exactly any interest to serve, any dividends to serve, just probably some expenses, like minimal expenses of employees or things like this. Their MNAV would contract. That just means that they wouldn't be able to accumulate as much Bitcoin, or probably not anymore for some time, right? And that's it.
Yeah, exactly. I agree. I think that their debt is so low that, as always in a bear market, or when the price of Bitcoin goes down, those companies would not be able to be that aggressive in their accumulation anymore. But it wouldn't be an existential threat to Metaplanet looking at those numbers, I think.
Especially almost all or even all of their debt is 0% rate, right? So again, no interest there. So even if the debt was even a bit higher, probably no issue for them.
And then moving to Semler, it looks like it's a bit higher, the debt to asset ratio around 20%. But I think also they would be fine because you see that they also have some cash on their balance sheet. And more importantly, they have their operating business that is cash flow positive, right? So in a bear market, they're not issuing ATM anyway, but they would not raise any additional debt, I assume, and would be able to service their existing debt through their operations.
And probably even accumulate a little bit of Bitcoin on the way based on their cash flows, right? Overall, also quite resistant, I think, in the bear market. And then blockchain group, that's going to be interesting to see with their Bitcoin denominated debt. I tend to think they wouldn't have any issue because, as you said, if Bitcoin goes down, then their debt goes down as well.
They would have to give back some Bitcoin, so they might lose Bitcoin at a certain point if the bear market is extended and they have to pay back the debt at some point, and the debt doesn't convert into shares. That's the only risk here.
Great. So I think we can move to the next topic, right? Which is our buddy Chanos, James Chanos.
Yeah. So I don't know if you've seen it on X, on the news. Chanos has been on Bloomberg explaining how he is shorting MSTR and hedging it by going long Bitcoin. He explained his reasons on Bloomberg and has been very vocal also on X and replying to Bitcoiners, explaining his thesis. And I think we can debunk some of it here. Maybe starting with the fact, Eve, if you want to go first. He mentioned that he doesn't care what direction Bitcoin goes, right? Because he's saying he's long Bitcoin, short MSTR. He doesn't care about Bitcoin per se. He doesn't know if it goes up or down, but it doesn't matter because what he's saying is that he wants the MNAV to compress towards 1 of MSTR. That basically MSTR is overvalued because it trades above its Bitcoin holdings.
Yeah, there's something that I probably don't understand in his logic, because assuming that Bitcoin goes down, then I expect that exactly MSTR would perform worse. And in that case, it makes sense, his strategy. And especially that MNAV is very sentiment driven, at least as of today. So probably there he would make some money. On the other hand, if Bitcoin goes up, I expect MSTR to start outperforming Bitcoin, especially that, again, sentiment would improve and the MNAV would expand. So he would definitely lose money. So the fact that he's saying that he doesn't care where Bitcoin goes tells me that he doesn't have everything figured out. So that was one take already that I found was a bit flawed in his logic.
Yeah, I agree with that, and this is also what the history of the last 5 years has shown, right? In a bear market, the strategy typically underperforms Bitcoin, and then in an uptrend, it outperforms, and it makes sense because it's a levered Bitcoin play at the end of the day, right? With the leverage that they take on to buy additional Bitcoin. And the MNAV is, he expects it to compress towards 1, but also that historically, we did have one moment in 2022 where the MNAV actually traded below 1 for a certain period. But other than that, the MNAV has been consistently around 2, maybe a bit lower or higher than 2, and that's where it is now. So it doesn't seem to make a lot of sense to expect it to contract very much from here.
And especially that if you start thinking of the MNAV, as we mentioned it a couple of episodes ago, as a forward-looking metric to value the company, right? Then you still expect Michael Saylor to accumulate more Bitcoin for strategy. So having an MNAV above 1 completely makes sense, right? Because Saylor is still able to sell his securities and add Bitcoin to the balance sheet. So in this respect, it's not a closed-end fund, as Saylor actually put it in his interview with Bloomberg. He's mentioning that he's an operating company, and clearly that's also an aspect that James Chanos is not understanding, right? And also that's why we've seen those other companies like Metaplanet and Blockchain Group have such MNAVs, because they're able to accumulate Bitcoin at a faster rate.
Yeah, and it's also a bit weird with the timing of this, right? Because I have to say, 3 to 4 weeks ago, I might have agreed with him with the way things were going with strategy being super aggressive on their common stock ATM and seemingly not caring about the MNAV, right? And the MNAV compressing more and more. And there, I might have said, yeah, it makes sense because the MNAV is actually going towards 1, and they are so aggressive at issuing new shares and diluting the common shareholder that it was a risk. But so much has happened in the meantime, with a lot of preferred shares being issued, and specifically the last one with the STRD. I don't think MSTR or strategy could be clearer in their messaging with a 1-hour presentation of what this instrument is, and specifically how they would use it in a bear market or in a scenario where the MNAV would need to be defended. And Saylor said very clearly that he will just issue STRD and other preferreds and buy back the common equity to support the MNAV. So they have tools at their disposal, not just to buy Bitcoin and to leverage Bitcoin buys, but also to buy back their own shares. So with this knowledge, it's a bit baffling to me that he comes out with this short positions after this. Before it, I might have understood it.
One thing to add here is exactly as you pointed out, the ATM or hitting the ATM was a big factor, or at least a big narrative a couple of months ago. But Saylor hasn't hit the ATM in almost a month, or even probably a bit more than a month, right? So that's no longer an issue, in my opinion. Regarding STRD, I do think Chanos makes a point to some extent, right? Because STRD has those dividends that may or may not be paid. And to some extent, I agree, right? Especially in a downtrend, who would like to buy such a product? So that's again going to be interesting to see in the bear market, because we haven't seen anything like it. So it's all theoretical as of today.
Good point, and it remains to be seen how attractive this instrument is. But we can't forget the other two, right? Where the situation is different with STRF and STRK that we discussed earlier, that have fixed dividends that have to be paid and are cumulative.
One last thing maybe is we're still in an uptrend. You can see a lot of positive sentiment, even though the price maybe hasn't picked up as we would have expected on the Bitcoin side, but there's still a lot of positive sentiment. So coming up with this short, regardless of what he mentions on STRD or all his views on it, yeah, is very, as you said, baffling.
And then maybe one more point that he made, if you want to comment on that too, he said that it's all financial gibberish, what Michael Saylor is saying, because if you have a house that you paid $1 million for and then you sold it 2 years later for 1.1 million, you made 100,000 in profit, and that's it. That's 100,000 in profit, right? And it's not like you can put 20x multiple on that profit and say that actually your operation now is worth 3 million, the house plus the 20x multiple on your profit. I do agree with that actually, and that's why I think it's we need to be a bit careful. There's a lot going around on X now with the amazing profit that strategy will have in Q2, because their Bitcoin was worth around 80K at the end of Q1. Now it looks like it will be around 100, 110 at the end of the month. And this is a huge paper profit that they're making on their Bitcoin, and that they will announce in their Q2 results, right? But again, it can go the other way in the next quarter. So we need to be a bit careful with that and adding a 30x multiple on the 10 billion profit that they will have at the end of the quarter. It's not really the way to look at it, in my opinion.
To some extent, I agree. Coming from the fiat world, that completely makes sense. However, if you look at it from a Bitcoin standpoint, then you need to flip everything on its head. And as long as Saylor is accumulating Bitcoin, he's actually still getting value out of it. Even if it goes down in dollar value, it's just function of the volatility as of today. But in the long term, it just completely makes sense that he keeps accumulating this Bitcoin. And if you look at it from a Bitcoin perspective, he's still making gains, huge gains, actually, when you really think about it. And probably the only reason why this mindset or the way that you think about it is still looking like financial gibberish, or I don't remember what Chanos said, is because Bitcoin is still not a unit of account. If it was a unit of account, then everything would be denominated in Bitcoin, and you see that there would be an increase in Bitcoin and therefore an increase in profit, an increase on the bottom line on a P&L version, not just the balance sheet, right? That's where you need to make your shift in the mindset. And that was the clear indicator for me that James Chanos doesn't understand Bitcoin. And if he doesn't understand Bitcoin, he cannot understand MSTR, and he can short it all he wants, but he better be careful on closing the position when he does, really.
And I agree with that. And that's why the metric we introduced earlier, the BTC gain, is actually the more important or the right way to look at the Bitcoin Treasury Company. And there we see that, ignoring all the noise of the Bitcoin price going up or down in dollar terms, they accumulated 76,000 Bitcoin in the last 6 months. And that's basically what matters, and that their balance sheet is getting stronger and stronger. But again, it will be denominated in dollars at the end of every quarter, and we'll see huge quarterly gains and huge quarterly losses. But at the end of the day, it's just noise, and we need to look at the underlying Bitcoin that they hold, and if it's going the right direction in Bitcoin terms. But it will be interesting or important, especially this one, because if the dollar gains remain as it looks like today in mid-June, they will qualify for S&P 500 inclusion at the end of this quarter for the first time ever. So it will be interesting to see the development there. And talking about Chanos, it's also funny that he decides to short MSTR now at the very start of their potential S&P 500 inclusion. He did the same thing in 2020, shorting Tesla before they were included in the S&P, and Tesla went up 700% after that. So not a very good track record on that side.
I'm glad to hear that, and I'm happy to be on the other side. Great. Any last words on James Chanos?
No, nothing to add.
Great. So Let's go to final thoughts.
Yeah, from my side, I think it was interesting today to see the different Bitcoin Treasury companies and their different strategies. We only touched on 4 of them, and you can see they have completely different instruments in different markets that they use, and it reflects differently on their metrics, right? And it makes it difficult to actually compare them and to see the risks behind them. And it will get more complicated in the future because we'll introduce more. There's other companies that do things completely differently, like Nakamoto, who has more of an acquisition strategy. There's 21 Capital, super interesting, with Jack Mallers behind it, and Tether, and many more to come, and that really think outside the box on how to accumulate Bitcoin. And we'll bring those to you in the future. Excited about that. And that's all for now from my side.
Yeah, no, from my side as well. I'm really curious to see what this trend brings, right? The Bitcoin Treasury Companies are picking up, and they all have such creativity, really. Like they come with all these novel ideas. We've heard a little bit from the new ones, as you mentioned, Nakamoto, 21 Capital, and Strive. And they all have their particularities, right? So really curious to see once they start being operational and accumulating Bitcoin to really deep dive into their specific strategies. The second part is I'm super bullish on the trend, because clearly you see there's StratFi that is still struggling to grasp those novel companies. Really, they really don't understand them, and they think they can easily short by hedging Bitcoin, and it's going to be super cool to see them struggle as they try to grasp what they're dealing with. It's also really fascinating to see people, when you tell usually smart money not to invest in things they don't understand, and even less short. So yeah, good luck to TradFi in the future with their shorts. So yeah, see you on the next one.
Bye bye, everybody. See you next time.
How many chairs are you sitting on right now?